basing on market price. Netbank is not basing on market price. Why should Safaricom be based on market price? Then you lose up value. I think when we say these things, it's not politics. It is about Kenya getting an extra 150 billion to build more roads to prosper Kenya and our systems. The very last thing I want to announce to all of you here is, my brothers and sisters, what we did in Kiharu in terms of launching a program of learners paying 500 shillings per term. It is the journey towards totally free basic education in Kenya. And we are going to make it happen. And we want to start with day secondary schools. And I'm not throwing this to anyone to do it. I will also be part of doing it. And I'm requesting a very simple formula. Instead of me doing this program in Kiharu and another one doing it in their constituency, and the discrepancies between this and the other one in terms of constituencies, my proposal is simple. And we'll do it, and I can assure you, I'll be the champion of this until it is done. CDF at Nairobi level, even before it comes to Kiharu, every constituency must be cut 30 million Kenya shillings, which will amount to 10 billion Kenya shillings nationally. We put that money into a kitty we are going to call day secondary school kitty. The governors in the equitable share to also contribute 10 billion Kenya shillings. Even before it reaches, the treasury should deduct the 10 billion. The national government, and especially the Ministry of Education, to also rearrange their budget and raise an extra 10 billion Kenya shillings. We put that money into a kitty of day school. Kenya requires only 30 billion shillings to make day secondary school education free and totally free, including lunch. And Kenya must start that journey today, not tomorrow. We must never use basic education ever again as a tool anywhere in the election period. The day secondary school and basic education must be made free. And by the way, my goal is for us to have free basic education from term 2 of 2026. Because education, in all economic models, education is the #1 parameter of an economy, for economy to grow. It brings R&D, it brings technology, it brings about skills. We must make this available to all Kenyans. And I can guarantee you, whether I'll be alone as a member of parliament, I'll do it and it will happen. Thank you very much.
Kidogo. I think our seats feel very hot. You're making us feel like that investor that Madam Director was talking about when you feature the investment to Kuchini. Let me ask: do you have any question? We can take 2 questions. Okay. Yeah, we can take 2 questions. Then we can release him.
Wow, I can only say that. Let me stand. So first, I think as a trustee, it's kind of creating a disruption in my thinking on what risk is. Because I used to think infrastructure bonds were risk-free until you talked about Ghana. And then the question of passive versus ownership.
Yes.
As a big principle. I think that's what I would say really landed with me. I think the question I have is, in this ownership journey, you've just taught us part of owning, we're actually owning the wrong things. How do we manage that risk of saying I own Quells, I own these? How do trustees build their capability to truly own what they should be owning? Because there is that bigger risk of, yes, passive. I would rather passive because somebody else is doing it for me, rather than if I do that. The second one, and it's very quick, economic growth versus economic development.
Yes.
I think that's something you could tell us a little bit, because we think more growth rather than development. And my last thing is, who are you? Because entrepreneur, economist, member of parliament, actually, but who are you?
Anyone else? can take one more question. Not from the media, just from the delegates. Anyone. It's not media time.
Hi everyone, my name is Morgan Banda, representing the Coca-Cola Provident Fund. And Honorable Ndindi Nyoro, we really want to appreciate you. Some of us have grown knowing you, but now we are your close followers because of what you are really enlightening the economy. So my question is, what was the rationale behind your proposal that Safaricom be split into three? I know from where you stand, you are opposed to the sale of Safaricom shares to Vodafone. But I just want to understand your logic. The CS for Treasury and Economic Planning yesterday was saying that he doesn't understand where you got your valuation. Yet, I think we have just done some valuation here, and I think from your point of view, it's like Safaricom is undervalued compared to other global players.
Thank you. Shimio.
Thank you very much. I'll be quick. My brother, please remind me your name.
My name is Paul Kasimu from Minet, but previously Safaricom.
I thought so. Thank you very much, Paul. In terms of ownership and the assurances, to call it that way, what we called risk before, I think it's now clear that there is nothing totally risk-free. It's nothing like that. It may take long, but it catches up with you. But on the other side, in terms of ownership, what I'm emphasizing on, the markets are not always the way they are. Let's underline that. So you may not call me here in the next 2 years and I say the same speech. Because the markets change. What do I mean? Currently, Kenya is very bearish. That's why for me, any company you are buying listed, majority of them are underpriced. Warren Buffett usually says that he does not look at share prices. Once he invests in a company, he doesn't care to look at the share price tomorrow or the next year, because you already made the right decision at the buying price, at the entry level. And always remember, you don't make profit at the point of sale. You make profit at the point of purchase. Any money you make, you don't make money because you are selling something. You make money because you got it cheap. So all I'm saying is that Kenya, if you compare the Kenyan market, Nigerian market, JSC, Johannesburg, and then you compare with non-listed companies, the listed companies in Kenya are grossly cheap. And the more the reason, just imagine, Paul, these are guys from Japan with sophisticated professionals. They want to buy a company in Kenya. They go to the market and the company is trading it today. That time it was cheaper. It went up after the announcement. But today, after going up, the share price is 244. But they are paying. They have committed to pay 590 for the same share. There are not two shares at Class A and B, same share that is trading at 244 in the market. Asahi is buying the same share of the market in quotes for 590. Then it just shows you the shares in the market are grossly undervalued, and the people who hold big stakes meaning they don't hold to trade, those people can't sell at the market prices. And if you look at the banks in Kenya, you see NCBA is being bought at 1.4 to book value. There is no indigenous Kenyan bank trading above 1 to book value. This is what that jargon means. Banks you value at co-capital and the market valuation. So you either get a premium or a discount. So the base is usually 1. 1 is the book value. 1 is a figure. So if it goes below 1, it means it is trading at a discount. Equity Bank is 0.75, KCB is below 0.6, PTP is 0.32 to book value, but NCB is being bought at 1.4 to book value. It shows you Netbank. Netbank is a 1 trillion bank listed in the JSE. They are willing to pay like double price the last 6 months price of NCBA, double price. Because they know the market is not a true reflection of the value of NCBA or Safaricom or any other share. I hope you get that. In terms of ownership, Paul, what you are calling passive, you know what passive means? Passive is just like unleashing your cow to go and graze with the hope it will come back to you in the evening. Just hope. You've unleashed your cow. Hapa yende mtu hapa yende wapi, no one is looking after it. With the hope, it knows home. So the person with the money now as here, I don't think I think they can go the step higher. Since you have the money, instead of owning companies number 1 to 20, you have 20 shares. You have 2 million for equity, 1.5 million shares for KCB. You have 2 million for Kenya Power, 500,000 for Kengen. When you are eating everything, the buffet, it means you actually don't know your favorite food. Then if you create your investment options from number 1, NSE has around 60 listed companies that are active. If you grade 30 of them from number 1 to 30, you grade them. This is number 1, like the one we graded today. You can clearly see out of the energy sector, which is number 1. And I don't need to tell you, you saw, you calculated yourself. So if you grade number 1 to 30, these are the best investments you have in Kenya. Paul, what would you be doing with number 23? Now you have nothing to do with number 8 even. You actually have nothing to do with number 7. Deal with the top 3. Ufukie hapo. Unless you have doubts about your capability to analyze. Economic growth, development, mostly growth is more broad. Development, we call it, it's more tangibles. Development is more tangibles. Building things, investing in programs, but growth is what manifests after development. Who am I? Me. but I can say I enjoy what I do in terms of leadership a lot, but I've seen Paul, it is self-reinforcing. They feed into the other. I love the kind of discussions you're having. You forgive me, I've taken more time. I don't even know we have taken more time. Because I enjoy really this kind of discussions. Even in the evening. Watu tutatafutana jioni tukae pahali tuongee tu mambo ya investments. For me, that is holiday, not swimming. So it is self-reinforcing. You realize in leadership, you also need this other knowledge about investments. But also in investments, you realize you also need to know the macros. So they are self-reinforcing, and actually each pivots the other. Morgan from Coke, Provident Fund. Thank you very much for the compliments. The reason for Safaricom spirit is simple for me. We have seen globally in many companies. When you have a company that has related segments, the total of the parts is usually more than the whole in terms of valuation. Remember, if you split it into 3, you have Safaricom as a telco, operating individually as a telco. Fintech, call it M-Pesa, it's already there. Actually, they operate almost the same way now. Fintech, which will be M-Pesa, you now unleash it to do business with everyone else in Africa. So they will not be domiciled around their parent company. It will be a company now doing payments, doing cards, doing like Alipay, you now unleash it to do its own business securely as a fintech. And then tower company, Kenya already has tower companies. Safaricom already leases some of the towers from other people. But they also have built so many towers on their own, just the same way they have done in Ethiopia. If you just let the tower company be, any other person who wants to host something on the Safaricom tower will be paying to be hosted. So the company will grow on its own by also leveraging on other customers, not just doing it specifically for Safaricom. But lastly, I had two options. That is one, splitting fast, it may take time. The government needs money yesterday, as you can see the urgency. So the simpler one, to get more money within a shorter time, list Safaricom in the London Stock Exchange. It will not take you long, list it there. So people will come to know, so the owner of M-Pesa is called Safaricom, because M-Pesa is known more than Safaricom. So in this second option, there is no splitting. Just list the group in the LSC. So people will take note of Safaricom, companies, telcos, Orange, Etisalat, Bharti Airtel, any other will take note. After taking note, then announce an international bid for anyone interested in the 15% stake. Announce it to the public internationally. So you'll have guys competing. This one competing to buy for this price, this other one, this price. It has happened. I gave it on TV the other day. 2013. There was a company called Pingo. I had shares in that company, a few. So we bought at 27.5. Na sio story ya kusoma kwa kitabu, real. So after buying at 27.5, the owners of Vipingo, hii shapa iko hapa inaitwa Vipingo, it was part of it. It was a Saiso company. So the owners came and decided, we want to buy these guys out. Kampuni kwe yetu. So they gave us a bid of 40 bob. Me, I had some, I think 10,000 shares. So nilikuwa nafanya hesabu. So I bought it at 275,000. These guys want to pay us 400,000. So watuitishe namba ya M-Pesa watume haraka haraka. Because I thought that was very good. A 45% upside. But Chris Kirubi na Centum, wakaenda CMA, wakasema no way. By that time Centum had like 1% of Rare Vipingo. Wakasema hata sisi ni shareholders. We also want to bid, to buy even you. Who wants to buy us? CMA wakakubali, the bid was open. Centum put up a bid of 50 bob. Hey, I thought, honestly in my mind I was thinking, Chris Kirobe bana siache hii mambo mengi. Tupewe pesa mtu afunge zake. Within 2 weeks, some other guys put up a bid of 55. Then it became a bidding war. The long and short of it, after 2 months of bidding, we pocketed 85 bob for the share. So my 275,000, I pocketed 850,000 because of one thing, competitive bidding. So that's all we are asking. I don't think it is too much to ask. Even the guys in government, national treasury, it's not too much to ask. Put Safaricom stake in an international bid. Kenya will get much more money. Thank you very much.